Look who it is.
Hey, Rockstar. Can you hear me? Hi. Can you hear me? Can
Hi.
you hear me? Hi.
Let me change. Oh, hang on. That's all right. Say something.
Hey, production team. So prior to this, there was a little bit of chatter when I was getting on, and we'll have to edit that out. So welcome back to my production. Isn't that fun? Here we go. Hey, everybody, and welcome back, and welcome to the first official episode of Real Estate Elevated. I am so excited to be here with you, to be back with the most emphasis on the right syllable, emphasis on the right syllable, the most amazing guest. I'm so excited to introduce you to. Yeah, Real Estate Elevated, the podcast where we help you build your legacy business and live your extraordinary life. I'm your host, Cheryl Knowlton, managing broker, real estate educator, and your guide to navigating this wild, wonderful, ever changing world of real estate. All right, friends, today is a huge treat because I have invited the man who has saved more realtors from tax disasters than caffeine has saved them from 6 a.m. showings or just getting out of bed, period, no matter the time of day. A man whose brain is literally basically the IRS code translated into English. The one and only Dan Mullen, CPA, and a lot of other amazing letters after his name that I'm so excited to have him share with you. Dan, welcome to the show.
Thanks, Cheryl. Great to be here.
Tell us a little bit about you.
Oh man, you want a fun fact or something like that? We're going around the room.
Okay, yes, a
Well,
very fun fact. So my listeners have been listening to me, most of them for a very long time, several years. They know that I'm a graduate of California public schools and I'm allergic to math. And so the idea of like doing my own taxes, I literally would rather shave my legs with a cheese grater while gargling glass in a room full of snakes, not happening. So the fact that you chose to do this, tell us a little bit about your journey.
oh my gosh, my journey. So where do we start? Well, I was a zygote in my mom's uterus. No, let's you can tell I
That
take things
is
very
an
literally
origin
sometimes,
story,
right?
if ever there was one, right there.
Origin story. I just was on my list of words I wanted to say during the podcast, I had zygote on there and I wasn't sure how I was going to get there. So,
Oh, welcome to
uh,
Toastmasters today, kids.
all right, here we go. So, so how do I get started? Well, my first career aspirations had to do with I wanted to be a pilot in the Air Force. My dad flew in Vietnam. He flew really, really cool jets, F4s and A37s. And he had some great stories. And I just thought it was cool. I loved the feeling of my body moving in motion. I like to do like gymnastics kind of stuff. I felt like I would love to fly a fighter plane with my hair on fire, if we're going to go Top Gun references. Um,
Yes.
so so I thought that was my career path. And when I was nearly 16, as soon as I could, I went to go get my pilot's license, where I found out I was technically colorblind. Which, if you know anything about being a pilot commercially, if anybody wants to pay you to be a pilot, and you have to fly at night or things like that, then you can't be colorblind and do that. And so,
Mm.
man, that's the following 3 days were lonely in my room, locked in my room, just trying to figure out, you know, the rest of my life because that dream had been shattered. So I did the next best thing, and it's really, really related. I ended up being an accountant, right? Really similar career
Okay,
paths.
okay. Those two things do not live next door to each other. Let's just be clear about that.
Truth. So, I mean, long story short, it just took me a minute to figure out my career path. And I don't know. I've always been interested in business, and I mean, Robert Kiyosaki's book changed my life. I have interesting opinions about him now, but when I was 17, 18, thinking about business, thinking about real estate, and thinking about money, man, cool. Boy, wouldn't I love to learn more about business? And I had the capacity to figure out, okay, the nuts and bolts in business. What is that? And that's accounting. Like I see where the money flows, I see the incoming, I see the outgoing, and so I just latched onto that and voila, here we are. I got my CPA in 10 years ago after being in accounting for, a couple of years before that and after college and such. And I love helping people save money on taxes and real estate. I mean, Robert Kiyosaki, here he comes again. He just lit me on fire with understanding real estate. And I just realized, man, there's so many powerful things in the tax code for real estate. So it combined two loves of mine, which is helping people save money and real estate. And like, oh man, here's this beautiful instrument we have to both make people a lot of wealth and save people on taxes, which one of the same thing, if you ask me.
I love that because that's such a beautiful niche, depending on what part of the country you're from, that you have developed, Dan, to help real estate agents to keep more of their hard-earned money. I don't think there is a real estate professional in this country who wouldn't appreciate that, regardless of how many hours they work. Many of my agents work their adorable little guts out, but to be able to have a strategy to track their finances the right way and avoid those dreaded tax season surprises that makes agents want to hide under their desk with leftover closing cookies. Like, oh, I'm here, uh, and just not want to come out. And that's a scary thing. I don't like unknowns. I don't like things that I can't control, which is kind of pretty much everything. But at least I like the illusion of control when it comes to three things, Dan: going to the dentist, taking my car into the shop, and anything related to taxes. I feel this sense of dread, and I just hate it. And so one of the first pieces of advice I was ever given when I was brand new in this industry 26 years ago was to surround myself with people who would make me look great. I'm very blessed to have had an amazing accountant who has really helped me, but I am even more excited that I met you because A, you're very brilliant, B, you're here in Utah, and you can address that for our literally global audience, because the tax code is the tax code, and it's the U.S. tax code. So theoretically, you could help people anywhere. But I feel like we've already made half of the audience exhale, knowing that you're here to save us from the chaos we didn't even know we were creating. So, yeah, let's talk about money, shall we?
All day, every day.
All day, every day, and you're so good at it. And now you've taught classes in my office twice, and you and I have taught an all-day class, the real estate um, uh, second home property specialist course together. That was so fun. We taught that at the Park City Board. I'm just going to hit it
Right.
right out of the gate. What do you feel like are the most surprising or the most painful deductions that realtors consistently miss?
Oh goodness. The Probably the lowest hanging fruit that I see all the time is when a realtor has their first good year. Like you make $40,000 that you're starting off, you're just launching. That's great. And then the next year maybe you make 120, or you have some flat years, whatever. And the first time ever you make 100,000, 120, 150, whatever that is. And then they get walloped with self-employment taxes. And it hits them like a freight train because that's not what I was taxed on last year. And you're right. That's the self-employment tax that hammers every realtor who has or every self-employed person really who has their first great year. And there's a great way to mitigate that, but it takes some proactive planning. It's called the S election, filing as an S corp. And it sounds complicated. It kind of might be if you're new at this kind of stuff, but that's where professionals like me come in and make that easy. Like, here's how we do this. Here's how much you're going to save. Sign here, off we go. Cool. $15,000 in tax savings later, you're a happy camper. That's probably the lowest hanging fruit for most realtors. If you want to talk about deductions, the one that's probably most misunderstood, gosh, like four of them come to mind right now. I'll talk about the three that are most audited, and so the three that could get you in the most trouble. We've got travel, we have meals, and we have mileage slash vehicles. Do you want me to talk about any one of those in particular order? Where do you want me to go with this, Cheryl?
Oh, I hear my listeners saying, yes, please teach me the things that I need to know so that A, I don't get in trouble, and B, I don't get audited, because none of us want to be relocated to a federally gated community. And certainly not for tax evasion or inability to pay taxes And worse, going back to what you were talking about having your first really great year. And most agents that I've known in my career, they're so excited about making this money. The very first thing that they want to do is go buy a new car. And the second thing they want to do is go buy new clothes. They want to look the part. Maybe they want a new phone or a new computer. Like, we want the trappings of success. And then at that end of that first year, their accountant tells them about self-employment taxes, and they're like, huh? Especially if they came from a W-2 salaried position where those taxes were withheld and they never saw it. They didn't get the money in their hot little hand in their bank account and then have to give it back. It was just conveniently carved out by their employer. So we definitely want to prevent all of our friends, no matter where they're listening from getting in trouble. So all the things. Yes, please.
Hey, all the things.
All the things.
Well, let's start with travel. Let's start with travel. Now, yeah, I know it sounds fun. Can you deduct it on a business? Yeah, there are certain things you can absolutely deduct as travel expenses, and you should deduct them as travel expenses. But where people get in trouble is when you have the mindset of, hey, I'm going on vacation with my family. I'm going to, I don't know, Disneyland. Somebody here like that kind of
Hey,
thing? I don't know,
what a
Cheryl.
great idea.
Disneyland. Or they go to the beach or something like that. And hey, I spend a lot of time on my phone talking to clients back home. Does that count as business travel if I'm doing business while I'm there? And what counts as, quote, doing business while I'm traveling? And people get tripped up on that a lot. In fact, it was in a job that was before the one I'm in now. It was when I was just starting out doing tax stuff. And an auditor happened to come by because he was auditing one of our clients who had done some travel shenanigans. And it was a realtor,
Travel
actually.
shenanigans. Oh boy, to be
Yeah,
avoided,
right.
friends. To be avoided.
To be avoided. Anyway, this auditor was in the office next door, and you could hear him because the walls were thin enough to where he could do this. And the poor client, my gosh, she was just grilling. He was just grilling the client, and he was saying things like, "Okay, tell me how this was a business trip." And she's like, "Well, I went to Hawaii with my family, and I quote looked at houses while I was there."
Oh gosh.
And yeah, and so normally a lot of realtors think, "Yeah, isn't that business?" Yeah, it is. And the next question the IRS auditor asked her was, "Did it result in a transaction? Did it result in going under contract?" And she's like, "Well,
Ooh.
no." It's like, "Well, you didn't have a business trip then. You just had personal." Boom, penalty, fines, interest. And so I know, and or being on the phone for 4 hours. That's another thing he asked too. Like, well, I spent a lot of time on the phone. It made my family really mad. It's not, I felt like I was doing business for 4 hours a day, all this kind of stuff. And he's like, well, that doesn't count either. Just being on the phone with clients back home, that's not a reason to go on this trip. You can't deduct it. Sorry. No, no soup for you.
No soup for you.
No soup for you. Exactly. And so I studied the crap out of this too, and I do because travel is so highly audited. Here's a way to get some deductions out of your trip. And I'm calling it a trip and not a vacation. I'm doing that very deliberately, right?
Mm.
But that's not the only thing you got to do is call it by a different name. You actually have to do business activities. 4 hours of legitimate business activities. And sorry, just looking at houses isn't going to cut it unless, you actually go under contract and you can prove that you spent those 4 hours doing that kind of thing. Even under contract, I've heard isn't good enough. You have to like have a closing. I don't know. Our IRS auditors are really fun people. Let's just leave it there.
Oh, they're a sheer
Um,
delight, aren't they?
I mean, they're at all my parties, not because I invited them, but no, I'm just kidding.
Oh
Um,
no. Time for some new party friends.
all right, yeah, right. So let me get there. So here's how you legitimately deduct a piece of your expenses when you go on a trip. So, first of all, name board members. They can be people you like to travel with. Name your board members to your LLC, to your S corp, to your whatever you end up being. Name your board members. They can be family members. I have family members on my board. I've named them in my official documents. Okay, and then what you do is you hold a board meeting at that location. Okay, it's got to be 4 hours a day. Remember, that's the rule. 4 hours a day doing this. Take minutes, and it's actually a really great time to educate your children or educate the people who travel with you on, hey, here's how business works. I want your input. You're valuable to me. Let's learn each other. Let's learn stuff from each other. Let's plan this business and we're all going to come out of this thing better. And we're going to have fun doing it. My kids look forward to this, actually. So last time we did this, I rented out a room in the hotel for 4 hours and we had the board meeting. We took minutes. We talked about, okay, where has our business been last year? How did we do? Okay, cool. Where are we right now? What are our goals? We spent a lot of time making goals for the business and for each other and within the business, of course. And then we have some trainings. We watched some videos on some pertinent topics to the business. I think our last one was on just conversations with, it was on listening and conversations. That was great. And then we had a lunch after where we kept the conversation going, and we spent 4 hours a day, 4 hours that day. We documented it. It was legitimate. My kids learned something. I learned something. We planned for the business. It was great. Now, because we did that on a 7-day vacation in Maui, we were able to deduct the cost of the airfare and the lodging and the meals for that day, 3/7 of the lodging and the airfare, and then we could deduct the meals for that day. So, why is it 3 days and not one? Well, I had to travel on the way there, I had to travel back, and then I get the day that I spent doing the board meeting, the 4 hour day board meeting. That's how I deduct legally and audit proof 3/7 of that 7-day vacation. So that's the way you do it right.
Wow. Amazing. 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 Okay. You talked about auto as another red flag situation for agents.
Yeah, a lot of people don't understand that in the tax code, there's two ways to deduct vehicles, generally speaking. You have the mileage deduction, or, and I emphasize the word or, the standard method, which is gas repairs, depreciation, oil changes, car washes, those kinds of blinker fluid, of course, right? You got to deduct that.
Blinker
People,
fluid. That'll get you.
I tell dad jokes, remember? Yeah.
Yes, we
So
love that jokes.
So it's either or. It's mileage or those, not both. People try to, I see inexperienced tax preparers do this all the time where, oh, yeah, you can take the mileage and the auto deduction. Like, no, you can't. Sorry. I've seen people fail audits because of that. So you got to be tracking your miles and you have to be doing that anyway, especially if you have a car that you use for business and personal items or personal reasons. Okay. So if you're going to the dentist, that's going to be a personal mile. I don't care if you talk about, unless that dentist is a client of yours and you're, working with them, the purpose of the trip was to get your teeth cleaned, right? I know the dentist is your favorite. I actually get really a lot of anxiety at the dentist too.
Same,
I get the nos
same.
out. I get the nitrous out because I
That,
get literally
oh,
anxious.
I have already ordered it for when I go in 2 weeks. So
Right.
yeah,
Okay.
everybody wish me luck. So it's an either or. It's not a both and in terms of mileage deduction or the auto deduction. So
Okay.
that's an important thing to note.
So you got to track your miles. There's an app that there's several apps out there, and I don't prefer one over the other. I've only tried one and it works fine. Things
Hmm.
like Mile IQ, Everlance, Stride. There's a few of them out there, and none of them are paying me, right? But
Hmm.
just in tax
Yet,
deductions.
yet, yet.
Yeah, right. So yeah, those apps are great because my phone goes everywhere with me in my car, and I'm sure that's true for every realtor out there. And it's got its GPS, so it knows my trips. And so at one point in the day, it'll ask you, okay, um, here's a list of your trips. Swipe left if it's business, swipe right if it's personal. It makes it really, really easy. And it remembers. So if you have a set drive that you go, if you're going to the board, for example, you drive there multiple times, it will remember and it won't ask you after the first time, like, hey, is this a thing you do normally? Like, yep. So it makes it really, really easy. It takes less than a minute a day, easy. And I have a nice, clean, audit proof log of all my business and all my personal miles. And so if I'm ever audited, I'm like, oh, here's the list. Here we go. I've got it right there.
And there you go, my like you. I was going to ask you, do you have a recommendation? Because I heard our listeners saying, yeah, but which one does Dan recommend? Beautiful. I love that. So let's have some fun, shall we? And let's dispel one of the biggest
I,
myths in the industry. Realtors love asking their colleagues about entity structures, and they love giving each other terrible advice.
Oh my
So,
gosh, yes.
yes, it's their favorite thing. So when talk about, you mentioned before about the S corp situation. Talk about that and go a little deeper into that so that agents know how to do it right and we're not playing the game of giving each other bad advice.
Okay, so an S corp. Where do I start there? First of all, I want to say it's not LLC or S corp. It's usually LLC filing as an S corp,
Ooh, say
right?
that
It's not
again
either or.
slower so people can write it down because now they're scrambling for their pen.
Right. So if you're thinking that it's a choice between an LLC and an S corp, that's not quite accurate. It's an LLC filing as an S corp or not. And it doesn't have to be an LLC. It can be a PLLC. It can be incorporated, but it's not a choice. That's the S election is a tax election. It's not a legal thing like the LLC is. Okay, so that's the first step there is it's yeah, LLC filing as an S corp or not. Why do you do an S corp? Well, number one, it's to save on self-employment taxes. The profit that your business makes is going to be subject to income taxes and self-employment taxes. But if you flip this S corp switch, you have a little bit more. Well, you have a big reduction in your self-employment taxes. Now, the S corp, when you do that, you assign yourself a salary, or hopefully your accountant does, because he or she is going to be better prepared to understand what that salary is supposed to be. And then you're only issued self-employment taxes on that salary itself. And then you might say, well, if that's true, why don't I put my salary at zero? Well, because the IRS says you can't do that. Like you're abusing the system. The IRS has thrown you this bone saying, okay, we understand self employment taxes is a barrier to new businesses. We like when new businesses start and thrive in the United States. So we're going to do this S election thing. It was in the late 50s, I think, when they made that legal. As part of that S election thing, don't abuse it, meaning put your salary at $0 and have no self employment taxes. Even if you have like, $200,000 of profit for your business, like you're trying to game the system, and there's a very high likelihood you'll get audited for that because hey, we gave you this massive benefit, but you're abusing it. So a reasonable salary, I have calculations on this. This definitely is a conversation with your CPA because you shouldn't pull this one out of a hat. You should work with your tax professional to determine what that is. The guideline for that is generally what would you reasonably pay somebody to do the job that you're doing for that salary. That's
Mm.
not the only rule. Usually, if you're making a lot of money, the percentage that I assign to your salary is lower. Meaning, if you make $50,000 in net profits in 1 year, I might assign you or talk you into a $25,000 salary. Okay, that's 50% of your profits are going to be subject to self-employment taxes. However,
Hmm.
if you make $300,000, I might say, you know what? $100,000 salary is probably good enough. That's 33% of your net profits. Off we go. That's reasonable to pay somebody who does this type of job. It just as a percentage, it gets lower the more money you make. Okay. You're still going to be subject to those income taxes, federal income taxes on the net income of your business. But the only part that will be subject to those Medicare and Social Security taxes is the salary portion.
Hey,
Does that help?
yes. And so I hear our listeners asking, okay, I don't want to do that for myself. Dan, can you do that for me?
Yes. And I even have a little calculator. If you want to put them in the show notes, I can put a link to that kind of calculation if you want to. But again, don't rely on yourself because I'm not assigning you an S corp salary in that calculator. That's still you have to do that, have to have that conversation with your tax preparer. But I do have a little calculator that can show you how much money you can save by filing as an S corp, and we can, like I said, I can drop that link in the show notes if you like.
Please, that would be absolutely incredible. And that's something that you could help a real estate professional set up.
Oh yeah, anywhere in the country.
Love that. Beautiful. That's absolutely phenomenal. This is the stuff that no one taught us when we got licensed. uh, yeah, this was not part of the licensing, the pre-licensing school that I built, certainly, and not part of my journey to really understand how in the world do we hold on to more of the money that we make without the scary word, the word that makes every agent break into an immediate sweat? Nah, that word is audit. Nobody wants that. Nobody wants to be audited. What do you recommend for habits, systems, processes to help realtors stay audit proof year round?
Well, regular coaching from your regular conversations with your accountant. And this is something I think this nation is critically hungry for. And I know why that is. Gosh, so many people just see their accountant once because, hey, we see him at tax time because it's a let's get this over with kind of appointment, right?
Mm-hmm.
And so, but really the real magic in tax planning is planning, being proactive. If I have a conversation with you in February or January or even December for the next year, there's a lot more I can do on the planning side to save you a lot more money than if I just see you on April 14th and like, oh my gosh, hurry and get my taxes done. But the tools in my tool bag are very limited. There's only a couple I can pull out there to really, help you save money on those taxes. So the planning is really important. And for some of my clients, it's monthly if they want to be really involved. Some of them it's quarterly. I like to have them at least biannually, depending on how involved you are. If you're a realtor, I like to see, especially if you're investing in properties, I like to chat at least quarterly on that because as properties, my gosh, if we'll talk about this later, but as a real estate agent, you need to invest in your own product. If for nothing else, the tax benefits are crazy good, and you guys have a shortcut into those awesome tax benefits. So yeah, regular to answer your question, regular chats with your accountant on a proactive basis. That's probably the antidote to all of this.
There you go. Planning ahead of time, well ahead of time. So you just mentioned quarterly taxes. I think that's the one thing that everybody knows that they need to do, kind of like going to the dentist for those checkups and something that they somehow avoid, like a gym membership in February. So, what is the simplest way for agents to stay on top of those quarterlies without crying into their transaction folder, real or digital?
Well, that could be a great time to hit up your accountant. Have I already said that before? Yeah, I'm going to sound like a broken record here, but the quarterlies, that's a great way. But I mean, probably the simplest way is just put a reminder on your calendar, block out 30 minutes of your time, or however much you need to catch up on your bookkeeping if you haven't done that, because how are you going to know how much to pay unless you've been doing your bookkeeping? So block out a time in your calendar and do it I forget. The quarterly payments are due, I want to say April, June, September, and then January of the following year for what you made. So block out times for that in those months, early in those months, like the first weekday of those months, to take 30 minutes and say quarterly taxes. Now, if you're an S corp and you're properly doing it, meaning you're running regular payroll, some of this is kind of done for you if you have the right payroll provider. And you have that conversation a couple times throughout the year. That doesn't mean set and forget. That means let's start it out in the beginning of the year. Okay, let's determine what that reasonable salary is. Let's take draws from that every month or every quarter, and let's revisit that, halfway through the year or maybe more often to say, hey, are you on track for your goals? You told me at the beginning of this year that it's reasonable for you to probably make X amount of dollars. We came up with X amount of salary. How are you doing on that? And we can adjust up or down based on your net profits because we don't want to pay too much in taxes and we don't want to have too low a salary to risk an IRS audit. So, long story short, reminders on your calendar, or if you're an S corp, have conversations with your payroll provider to get that set up. And that's a little more automatic, but still shouldn't be fully automatic because you want to revisit that and adjust as the year goes by.
Awesome. So, what if an agent is brand new, or what if they're having an off year? How do they adjust for those quarterly payments with if there's just not a lot of income coming in?
Well, there's a couple ways to do that. At the end of the day, you will owe some taxes based on how much money you made, and
Hmm.
that's what your taxes are going to be. Now, sometimes, depending on how much you make, if you make over $150,000, then the following year you're going to be expected to make those quarterly 110% of what your tax liability was last year and divide it up by quarterly payments. Okay.
Mhm.
Now, if you had a bum year and you end up owing less than that, you should still make some quarterly payments. But again, if you don't want to figure this stuff out because you're a realtor and you want to leave the math to your accountant, fine. Like that's what we're here for, to help you
Yay!
really wrap your head around what that is and what it should be.
Yeah. So you mentioned this next piece about, excuse me, about agents investing in their own product. This podcast is all about helping agents live an extraordinary life and build a legacy business. So let's talk a little bit about wealth. What do you think separates the successful agents from those who struggle year after year?
Proactivity and planning. Um, so keeping your wealth, making your wealth is one thing, keeping it is quite another, right? So investing and smart investing is going to be great. But I mean, you make $400,000 and you spend $400,000. Cool. You're probably having a lot of fun, but I mean, is it going to be fun when you retire and you have nothing left?
Right. And so I hear agents, I hear you saying, I have a really great accountant and he writes off all of my everything. And so by the end of the day, I couldn't even afford a Happy Meal based on my taxable income. How in the world am I going to be able to get a mortgage to buy investment properties given the fact that I'm writing everything off? How would you answer that?
This is my favorite question that you'll probably ask, Cheryl, because oh my gosh. I happen to have a mortgage license, and
Yeah.
this is where the this is where the perfect storm hits. The big wave hits the other big wave. And okay, so writing everything off, you're probably not gonna qualify for a conventional loan if you do that kind of strategy, except for you might be able to. Let me explain where I'm going with that. I have a mortgage license, I have a CPA license. So, therefore, I talk to underwriters all the time about this stuff because self employed people are the hardest loans to get through to cross the finish line, are
Yep,
they not? Have you seen that,
absolutely.
Cheryl?
Yep.
So, because I talked with underwriters a lot on this stuff, and I have the ability to provide licensed tax advice and I can prepare tax returns, I know how to make you look poor to the IRS and rich to a lender, rich enough anyway.
Woo!
So,
Without going to prison?
without going to prison, no, everything is above board, everything is legal. There are limits to that, of course. For example, if you only make $50,000 in revenue, like checks that were written to you, probably not a lot we can do here in Utah anyway to get like, a $400,000 property might be out of reach for that with today's conditions, right?
Mhm, mhm.
However, probably one of my favorite stories is because I was working on this person's tax return and they ended up getting a loan with the company I was working with at the time. They had $13 of taxable income and they qualified for a $600,000 conventional loan.
What?
Conventional.
Wow.
Yeah.
Wow.
So that was fun. That was a result of what I call the CMOP, which stands for Self Employed Mortgage Optimization Plan, meaning I go through your tax return and your plans for the following year. This is a proactive thing for dang sure, because I don't amend a tax return to qualify for a mortgage. That is asking for it. It's very, very rare unless I have a very dang good reason to justify a real amendment, like you made a bunch of mistakes in there. I'm not going to amend a tax return, and I won't do it uh, for the sole purpose of qualifying for a mortgage. We have mortgage fraud in there, and we also have tax fraud potentially. But if you give me enough time and I can see your tax returns, I can see what you're making. There's some things I can do legally that, again, make you look poor to the IRS and rich to a bank. For example, how are you recording assets? If you bought a laptop this year, let's say you bought a Mac and it was $2,400. So the reason I chose $2,400, if you break that down by 12, that's $200 a month, right? So if you just record it as an expense, that laptop, $2,400 expense, that lowers your mortgage qualifying income by $200 a month, right?
Okay.
However, if you record it as an asset instead, and you take bonus depreciation, we can do that now because of the one big beautiful bill at 100% rate. You record that laptop as an asset, a $2,400 asset, and then you take bonus depreciation, you still have a $2,400 write off. Okay, it behaves the exact same way. However, your mortgage qualifying income does not go down by $200 a month because you bought an asset. That's not a cash expense, that's an asset. So that's one of probably a dozen or 12 to 15 things I analyze on your tax return and on your bookkeeping to see, okay, how can we make you look poor to the IRS and rich to a bank? So those are really fun consoles because that has such a powerful effect on helping people qualify for conventional loans.
That's amazing. That's wonderful. Holy cow. That just made my head spin. And yeah,
There's more to it.
I can tell there's more to it, which is why I'm so glad that our not this next piece, but the piece after is for people to be able to know how to connect with you and find your amazing book and your website and all of your contact information and all the fun. But this is my favorite part of the show. This is called the magic move. If a realtor anywhere in the United States listening to the show today changed one thing, one habit, one system, one mindset that would be the biggest financial, create the biggest financial transformation for them, what should that one magic move be?
Oh my goodness, narrowing it down to one seems difficult, but here we go, I guess. Goodness.
Drum
One
roll.
thing that could have the invest in real estate, buy their own product.
Yep, invest in real estate in your own product, which ultimately is going to require expert advice and help and a strategy to put you on a path. My youngest daughter, bless her cute heart, married her high school sweetheart. They have two amazing, beautiful daughters. One of whom tried to FaceTime me during the earlier part of the show. If anybody heard that, is wanting to know where I am so that she can help me decorate for the holidays, which is it was so adorable. And they have three dogs, and they live in our basement, which is a huge part of the reason that for me, we have not made the real estate move that we want to move there, and made the real estate move that we want to make because I'm unwilling to put those babies out in the snow. They are my heart and my soul. And my daughter is on a path to home ownership with an amazing mortgage lender who's helping her with that. But all of us need professional help and a strategy. We try present tense to talk to our clients about how they need our professional help. We also need professional help when it comes to creating that strategy with the tax situation and the mortgage situation so that we can invest in our own product.
Indeed. Yes. And I did want to mention too, before we got too far off that rail, is that even if you don't qualify for with your tax returns, we can't get you there. There's other products out there like DSCR loans, bank statement loans that don't require those tax returns to get you qualified. But I think you're right. Yeah. I mean, real estate builds so much wealth. It does for even people living in their own homes. It certainly does for investors. And that's one way real estate agents can really pay very few taxes, very little in taxes, and still have a lot of wealth. Do something. We can get into cost segregation studies. We can get into 1031s. I have a feeling, we don't want to have our eyes glaze over here, but it's such a powerful move for real estate agents to invest in their own product.
Absolutely. Yes. And you mentioned DSCR loans. For anyone who's not familiar with that, will you just touch on that a little bit, Dan?
Yeah. So DSCR stands for debt service coverage ratio, and it allows a lender to underwrite the property based on the income that the property generates, not the income of the borrower. So they don't want to see your tax returns, they don't want to see W-2s, they don't want to see any of that. They send a person out, an appraiser out, and that person determines, okay, what could this place rent for? Will it cover the mortgage? And if so, great, you get better rates and terms. If not, you can still get the loan sometimes. But yeah, they use the income of the property itself, not your tax returns and not your pay stubs. Wonderful
Beautiful.
product.
Yeah, that is a beautiful product. When I was in mortgage, they did not have that. They had ninja loans. No income,
Oh
no
yeah.
job. Yeah, but we're not going to talk about that. That would take us down a very, very, very difficult path. Um,
Oh boy.
Dan, you have elevated our listeners today, truly. And I'm so grateful for your willingness to come on the show. I know how busy you are. At least it's not tax season. So thank heaven for that. But before we wrap, where can people connect with you, work with you, find your book, find out more about you and your services?
Oh my goodness. So, believe it or not, my Facebook page is kind of the tip of the spear for me. I'm building out LinkedIn. I've got my own site. It's gyfst.net, stands for Get Your Financial Stuff Together.net. And
I love
I don't have my
that.
book there yet, or my books. I've written two with my brother. One of them's on the financial impact of renting and owning, which is great to help first time home buyers really understand why they should stop freaking renting and why home ownership is the foundation of their financial independence. And the second one is called Reverse Mortgages, the Financial Ugly Duckling, which I think reverse mortgages are criminally misunderstood in this country. And that's where we break down all the myths and show where it can be a financial benefit. I'm going to save my parents probably $100,000 in taxes due to their reverse mortgage. Most realtors don't understand that. Most of the population certainly doesn't. Most loan officers don't even understand that very well. But yeah, to reach me, probably gyfst.net is my website. I'm on LinkedIn. It's probably easier to contact me there and on Facebook.
Nice. And how do they find you on Facebook one more time for anyone who didn't have a pen?
The name is Dan Mullen, DanMullen.
Beautiful. Love it. Love it. Love it. Oh my goodness. Any final words of advice, Dan, that we haven't already covered?
I wanted to reiterate how or reemphasize what you said about surrounding yourself with great people. That is so important to my network. I don't know beans about negotiating a contract for a real estate purchase. I don't know that. That's not me. But I have people in my network who know that very well. It's probable you don't know the tax code. That's okay. That's what I'm for. I really, really, really love my job. And I know it's weird to hear somebody say they're passionate about taxes. I don't love paying taxes, right? But I love saving people money. That's a lot of fun. And I love using the tax code to do it. And I have a lot of experience doing that and a lot of fun.
I've never heard fun and taxes used in the same sentence before, but if anybody can make that happen, Dan, it is you. Oh my goodness. Thank you. Thank you so much for being here with us today. Friends, I know you got value from this incredible episode and so grateful for Dan for being here. Make sure that you like the show, give us a 5-star rating, share this episode with another agent who desperately needs to hear it, and keep building your legacy business so that you can live your extraordinary life. I'm Cheryl Knowlton. This is Real Estate Elevated, and we will see you next Monday. Friends, until we are able to be together again, remember to keep being the magic you wish to see in the world.